I just wanted to talk about some of the investment options from the big three brokerage firms, Vanguard, Fidelity, and Schwab, that are highly recommended and all would be a good place to invest. So I have another video that talks about why you might choose Vanguard versus Fidelity versus Schwab, so you can go check that out if you're wondering about that. I encourage you to invest in index funds or index ETFs, and so here are some of the examples of things that you might consider investing in at the different companies. And so I usually encourage people to hold their main part of their portfolio in either the total US stock market or the S&P 500 or kind of a large cap fund. That way you're investing in the largest companies in the US, if it's S&P 500, or the entire US stock market. And so that would be like 70-75% large companies, as well as just a little bit of the medium-sized companies and the small companies. And so if you're at Vanguard, Vtsax is the investment that you'd probably want to choose. That is the index version. VTI is the ETF version of that same fund at Vanguard, and you can see these numbers in parentheses. Those are the expense ratios. So the lower the expense ratio, the better. But of course, you don't necessarily have to choose the exact lowest on the whole screen. At Fidelity, that would be FSKAX or FZROX. Those are both similar total US stock market funds. One of them is a new zero expense ratio fund. The other one's kind of been around for a little bit longer. Either one's perfectly acceptable. And then you can see the options for Schwab as well. You can see there are, the S&P options. There's the total international stock market funds. Notice that with Schwab, those funds are only in developed markets. That doesn't include the developing markets. So that's just something to be aware of. Vanguard does have a total world stock funds, index funds and ETFs. The rest of them do not have that. And so if you're wanting to invest in the whole world in the proportion of kind of how much of the world stock market is taken up by, Canadian investments or whatever, then that would work for you. If you are wanting to invest in bonds, you can see the total bond market options from these different companies. If you're interested in Reits or real estate investment trusts, you can see the options here. Reits are interesting because they're kind of different than a lot of the other investments, and they are known for giving out dividends. So if you're really interested in dividends, that being said, I encourage you to keep Reits in a retirement account, not in a taxable account. So you're not actually going to be able to use those dividends for anything. You should just keep reinvesting them anyway. And then you can see an example of a target date retirement fund. And so there's an example of each of them. And their expense ratios, they're all pretty similar. Note that Fidelity does have some non-index options of their target date funds, and so just make sure you get the index version if you decide to go with Fidelity. Something else to know is that with Vanguard, the index fund minimum is $3,000. You need to have $3,000 before you invest in any of their index funds. The Fidelity and Schwab ones do not have a minimum. And also, if you invest through Vanguard, then the minimum for their ETFs is going to be one full share, which is usually $100, $200, $300. Whereas you could actually invest in Vanguard ETFs from Fidelity or from Schwab, and you would be able to get fractions, so you could buy it in a $5 increment or something like that. So hopefully this is helpful. Feel free to ask any questions that you have.